Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing amazing here, wrapping up another week on Friday after the close. And the markets had a beautiful day after the NFP non-farm payrolls jobs data came out early this morning, guys. So we'll take a look at how the jobs data plays into the Fed's narrative of increasing or decreasing interest rates. Then we will take a look, obviously, at our major indexes and see how they did and see how they wrapped up the week. We will also take a look into a bit of crypto and lastly, our major tech names and my portfolio to see how we wrapped up the week. Key indicator here, guys, it was a very good week on the portfolio, and we are going to look to wrap up a very nice year-to-date gain in December. So without further ado, guys, let's get right into today's video. So SPY up 0.43%, QQQ up 0.45%. Very nice mixed market on the day. As you can see here, most of big tech on the rise, except for Google, a slight little pullback here after their 5+% day yesterday. That's okay. And you did see that participation come in from healthcare and financials too. Mostly a mixed market. This is exactly what you like to see, especially when SPY hit new 52-week highs. Yes, guys, new year-to-date highs on the S&P 500. We were calling for the breakout, and the breakout is happening right now. So on the one-day relative, you can see that everything pretty much was doing fairly well today, except for utilities, communication services, largely led down by Google, and consumer defensives here. On the 1 week relative performance, everything was fairly mixed with some losses in consumer defensive, basic materials, and energy. Energy deflation here is very, very good for the potential inflation read that we are getting next week. And then you can see on the 1 month relative performance, everything, guys, since the month of November, obviously in the green, everything except for your energy. So really best case scenario across the markets for our long-term bulls here. So what happened this morning and what led to the rally? I will show you right away. It was some key jobs report data that was very well received. U.S. payrolls rose 199,000 in November. Unemployment rate falls to 3.7%. So the jobs market is very healthy, but it is coming down. And this is exactly what the Federal Reserve wants to see. And I will explain. So here we go with the data, guys. Non-farm payrolls rose by a seasonally adjusted 199,000 jobs in November, slightly better than the 190,000 expected and ahead of the October gain of 150,000. The unemployment rate declined to 3.7% compared with the forecast for 3.9%. So that's very, very, very good. And average hourly earnings, a key inflation indicator, increased by 0.4% for the month and 4% from a year ago, close to expectations. So let's take a look at exactly what happened here, guys. This is the chart that the Fed wants to see. They want to see job creation go slightly down, and I'll explain why. This is the bull case for decreasing interest rates. So once again, the Fed has two mandates: keeping inflation to target to 2%, and number two is keeping the economy in full employment. Now, they've been doing a great job at point number one of keeping inflation under control by rising interest rates extremely fast. And now you've seen over the past 6-7 CPI reports, guys, that inflation is coming steadily down towards their target. We're not there yet, but it is on the very nice trend of a decline. Number two mandate by the Fed is full employment. Now, when the Fed sees that inflation is coming down at a steady pace, and when the Fed also sees that ever since last year, your month-over-month employment numbers are getting smaller and smaller and smaller, it can start taking their foot off of the interest rate gas pedal, metaphorically, right? So this means that they now have two things in their favor to potentially decrease rate. So number one, the fact that inflation is finally coming down towards their target, so they don't have to be as aggressive with it. And number two, the jobs market is getting softer. And this is visible by this chart right here. Jobs market is getting softer. There's less and less jobs available. So they may get worried about the state of the economy. And what do you do to stimulate an economy and create more jobs? You decrease interest rates. It's the only tool they have. So as long as they see inflation coming down, but also jobs coming down, I'm not saying it's bad. It's still decently healthy numbers, guys, but it's not what it used to be. You can see this clear downtrend. So they now have two signals that tells them that it may just be time to pause and decrease rates into 2024. Exactly what you want to see. And the second part of the report is what I wanted to highlight here. This is your indication that we are not in a wage price spiral. A wage price spiral is when inflation goes up, wages go up as a byproduct of that because companies have to match employee wages with inflation. And then the fact that people are making more money, they have more money to spend. And so they pour more money back in the economy, which drives inflation even further. Then companies have to increase wages even more. And that's what creates the wage price spiral to the upside. Now, this has not been happening. You can see that wages peaked back here in March of 22 of pretty much near close to 6%. And now we can see the year-over-year changes measured on a month-by-month basis. You can see that your wage gains are now starting to drop with the level of inflation as well. This is exactly what you want to see. It shows us that the economy is not currently being plagued by a wage price spiral. So everything is moving in the right direction. Yes, wage increases are getting smaller and smaller, but they're pretty much matched with inflation at the current time. What you don't want to see is this chart going up, and it's been on a steady downtrend with inflation as well. So everything is coming back down to normals, guys. That is the important part of this report, and that is why the markets reacted so beautifully. So with all that being said, let's get into our technical analysis. Well, guys, SPY with the technical breakout. You can see 1, 2, 3 beautiful legs here of upside motion, and then we were consolidating sideways for the better part of the past 2 weeks of trading. Consolidating sideways, we allowed for our 12 EMA on the daily to catch up, and now we have just broken out. So once again, bulls setting a new daily uptrend after this consolidation zone, and we just cracked our previous 52-week high ever so slightly, but you can see that we are decently above that level. So now we have a bunch more support to fall back onto. If ever the bulls give this little area up right here, well, we have a decent little area to retest here. Anything at this point above 454 is just going to be looking for a daily lower high for price continuation to the upside into the end of December. And on the weekly chart, guys, this weekly breakout looks absolutely amazing. You can see slight little hesitation here for the better part of the past 2 weeks. And now we are looking for the weekly uptrend confirmation. It's been doing very, very good. You can see it better on the futures chart here as well. This nice little weekly momentum up to the upside, and QQQ is leading the way once again. You also have very good participation from the rest of our indexes. So broad market bulls are here, and they're here to stay. I will remind you, with the monthly close in November, it was largely anticipated, and I was anticipating as well, that you do get a bit of follow through the month of December. Your monthly breakout has now been completed as we have smashed the previous 52-week highs ever so slightly. So I do expect it to continue into next week. Next week, 2 big things: CPI report, and CPI should be coming down, guys. It's now winter. Energy prices have been plummeting, so I wouldn't be surprised if once again we get a low inflation number. And number 2, we have the summary of economic projections, also known as the Fed dot plot, on Wednesday. That's going to be absolutely crucial to the markets. It's going to show us whether our Fed members are very bullish on interest rates going up higher, or if they have adopted a slightly more dovish stance, meaning have they tapered expectations for the next 12 to 24 months? Can we see a few members revise their interest rate estimates to the downside? I'll remind you, last time they released this down plot to 20th of September here, you can see the ensuing results. The market absolutely hated it, and they started pricing up interest rates to the upside. This is when the 10-year yield went on an absolute tear of a rally. You can see it right here, the 20th of September. This is the breakout of your range right here, and it just went on way through the month of October. So all that being said, guys, I do expect the summary of economic projections, the dot plot, I do expect for a few members to revise their estimates down now that they've had 3 more additional months of data in terms of job numbers and inflation numbers, which we have just covered as well. So they should be able to bring down those estimates a bit. And if that happens, Wall Street is going to pretty much call their bluff again. They are going to bid asset prices higher because they will be expecting that the Fed will be reducing interest rates through 2024, even though last meeting they said they were not going to touch them. So a little bit of bluff calling potential from Wall Street as well. Now let's move into QQQ. QQQ has not broken its most recent 52-week high. The 52-week high was set pretty much Wednesday, November 29th. So you see that we're still a little bit away from here, but QQQ doing a great job of recovering here after losing the daily uptrend. You saw them lose the daily uptrend right here when we lost our higher lows here at 383.98, this line right here. We lost them ever so slightly here on the 4th of December, but now doing a very good job of making an engulfing move to the upside. So now bulls will be looking, if they cannot V-shape this and crack to new all-time highs, new 52-week highs, excuse me, we will be looking for a potential 2-step reversal for a new daily trend to be set. The bears have not set the daily downtrends. That was the possibility here after pretty much Wednesday's trading, but the bears did not follow through. They got engulfed by the bulls. So now the bulls set up beautifully. If they don't V-shape this for a potential 2-step, and I will remind you on the weekly, guys, the weekly, we are still looking for a weekly trend breakout confirmation here. So bulls about to set the weekly uptrend. If they do break this previous level here around the 394 highs, we will have a new weekly uptrend in motion. So we'll keep a very close eye on that next week. If the two sets of data next week come out bullish, guys, the Fed dot plot and CPI inflation, we are going to make this weekly uptrend happen. And I'll remind you, it wouldn't surprise me because of how strong of a month November came up. November set the monthly uptrend in motion. So I am expecting a lot of follow through in December. And next week may just be the week to kick it off. Bulls looking very good. XLF financials holding up nice at your highs. Still, however, battling with our overhead resistance, guys, $36 to $37. We know this as a big resistance area from the last 2 years, and they are still struggling with it currently. But bulls not giving back a lot of space at all. You can see this right here. 1, 2, 3 clear daily legs up. And now we are just bull flagging at the top here. This is exactly what you want to see, cooling off our RSI levels as we kind of move sideways. And bulls are going to make an attempt at the resistance area, it does seem. So if SPY and QQQ rise nicely, if we get some good inflation and good data from the Fed next week, it's very possible that your financials start making a move into this resistance area. So keep your eyes peeled from that. The daily bulls are pretty much in full control, have not sacrificed much, allowing the 12 EMA to catch up with us. We are sitting on this current previous level of resistance right now, which is now new support down here, all the way at about 35.60. Haven't got down to it right away, but expect the bulls to put up some resistance if ever we do fall into it early next week. And on the weekly is still looking very bullish, guys. No signs of pulling back yet. Bulls in full control. So we will see how well they deal with this resistance area leading into the next 2 weeks. Now, XLV Healthcare consolidating sideways, but that is also very good. It's allowed for a big cool down of your lower time frames here. You can see the RSI pulling back very nicely, potentially ready for another leg up. So XLV was one of our trailing industries and now looking like it wants to bull flag for a potential other leg up. So I'll remind you, we're still looking for a daily higher low. Anything pretty much above 129.40 is just a daily higher low, daily bull flag for future price increase appreciation, guys. Doing very good. I'll remind you, healthcare is sitting on this previous area of resistance. We're now using it as beautiful support. We also have confluence from all your moving averages, pretty much the 12 EMA in yellow and the 200 moving average in green on the daily right now. So beautiful area of confluence, your moving averages and your previous area of support, which is now resistance. So wouldn't surprise me if XLV goes for a bit more on the weekly, still looking very healthy. No signs of pulling back yet, especially with this daily bull flag formation, right? So looking very healthy, nothing bad to say at all. Keep an eye on your healthcare bulls, especially if QQQ doesn't rise as much. If big tech continues to take a little bit of sideways action, a little bit of a breather, wouldn't surprise me if XLV is there to make up the gains. And now IWM Russell challenging our highs today, pulling back ever so slightly, but nice little green day here, 0.76% to the upside. So I will remind you, we are still in full daily breakout mode after this range of consolidation. We have now set the new daily uptrend. We are just looking to confirm into a new higher high at this point, guys. So it does appear as if the daily higher low is set. 183.42 is your line in the sand level. Lose this and you may set a slight daily downtrend. Daily downtrend wouldn't be bad. It would just mean that we're in for a bit of weekly consolidation and the bulls with tons of space, anything above 162 for your weekly higher low to be set for weekly move up, guys. It'd be very surprising if the bulls make it all the way into this resistance area with one clean shot. They may just need 2 steps. So we will see how that follows through in the rest of the month of December. But as of now, bulls looking very good. Just keep an eye on this area, guys. 183.34 pretty much for the daily downtrend. That would mean more weekly consolidation, but you have some beautiful moving averages right here. You have this whole area of resistance, which is now going to be support if we pull back there, guys. So just keep that in mind. The Russell looking very healthy. And lastly, our Dow Jones, guys. Dow Jones pulling up once again here, challenging the highs, just like the Russell, just like the SPY, and almost like the QQQs, right? So very good performance by the Dow Jones. 1, 2, 3 beautiful legs to the upside. Now the Dow Jones has a lot of space to work with here. Just keep an eye for the bottom of this range, 36,000, right? Don't want to see the bulls lose that. If they lose that, they could set a slight little daily downtrend, but that's fine. That would just be a bit of weekly consolidation. And we did highlight this area yesterday, guys. 35,600 is going to be your pullback area if ever we pull back in a meaningful way. I'm not expecting it, especially if the data is bullish next week. If the data is bearish, we could get some pullback on some of these indexes here. But as I've shown you, the bulls have tons of space to give. So keep an eye on your little pullback scenario. But for now, daily bulls are just flagging at the top here. RSI is still considerably overbought. So we will be keeping an eye on that. But if they do just use this to set a new daily uptrend, you'll be looking for the break here of 36,300 to get that. And at that point, guys, your next weekly candle is pretty much going to take us right into the all-time highs roughly under 37,000, guys, right? We are currently only off under 2% from the all-time highs. Very good performance by the Dow Jones. No red flags whatsoever. Now let's move into a bit of crypto here. So we're going to be covering crypto a bit more now that earnings are finished here. So let's do a bit of a deeper analysis on crypto, shall we? So Bitcoin doing very, very, very good. 44,000 down slightly on the day, but had a decent day on Friday. This is the new candle here from Friday into Saturday. So Friday had a nice little 2% update. What are we looking for? Just looking for bullish continuation at this point, right? Daily uptrend is very, very, very clear by the bulls at this point. They're never really losing the series of higher highs and higher lows, even within this range right here. And now we've just expanded here to a brand new level. So where exactly are we going, guys? I have two areas in mind personally. So it's going to be this area right here. Let me put a very big box on it so you guys can see this clearly, right? So it's right, this demand, the supply zone here, 51,500 all the way down to roughly 47K. That's going to be the area where the bulls are likely to pull into before encountering some more massive resistance. We are currently in a bit of a resistance zone right now. You can see this big chop zone here in the 45K range, but it does have the potential to come up all the way through 47, guys. We are very overbought on the weekly. That's a big, not a big, but a red flag for me at the current time. So very tough to be buying in these levels. Now, where are you going to buy Bitcoin on the dip? Well, I will show you guys. Now, your daily bulls are obviously in full control, so we would need to look for a daily downtrend for some weekly consolidation, right? It is a beautiful weekly uptrend at this point, and the bulls don't have any signs of slowing down. First sign of slowing down will be the set of a daily downtrend. Then we look to the weekly, and then we would be looking for some weekly consolidation. The key here is the monthly, guys, all right? So monthly consolidation is inevitably going to happen. If we hit this area right here, I do think we would be due for a bit of a bull flag action right here, right? So I am looking for Bitcoin personally. If we do pull down 40,000 all the way down to potentially 37.5, in my opinion, that would be a gift. Anything lower than that is pretty much unexpected right now in terms of the probabilities. But if we do pull back from current levels 44 to pretty much 40,000 to 37,500, I will be initiating a few positions on Bitcoin here. That would be a very healthy monthly pullback before a potential another monthly leg higher here. And that's going to push us pretty much to all-time highs. I would not be surprised if Bitcoin goes for the all-time highs over the next 12 to 18 months in a decreasing interest rate environment. That is going to allow a lot of people and potentially some institutions to take on additional leverage, additional risk, and go into cryptocurrency once again. So I am expecting good things from Bitcoin, right? And we are going to keep a close eye on that. My next average into Bitcoin, as I said, will be under 40,000 to 37.5 for a very bullish long-term time frame continuation here. These are the long-term time frames that are going to play a very pivotal role in bringing Bitcoin back up to its all-time high. Now let's look at the Ethereum and the altcoins. So Ethereum doing very good, but let's do a little bit of comparison analysis right here. So from the bottom, let's take it right from the 18th of September, right? So you can see that Ethereum has put in some decent gains, roughly about 49%. But Bitcoin largely outperforming Ethereum here. If you take it from that same week on the 18th of September, let's take the lows even, you can see that Bitcoin performed very good, 74% to the upside. So Bitcoin clearly outperforming Ethereum, and you can see that in terms of Bitcoin dominance. So this is a chart that represents how dominant is Bitcoin over the rest of the crypto market. And you can see that this entire move all year has been led pretty much by Bitcoin. But now we are starting to get a little bit toppish potentially on the dominance chart. So we'll be keeping a close eye whether Bitcoin dominance is going to reverse. And when Bitcoin reverses potentially and consolidates, does it allow for the rest of crypto to potentially catch up? That is one narrative that I'm playing close eye on that. You can see this best on the chart illustrated by ETH to Bitcoin, right? So this is the chart of Ethereum versus Bitcoin. So you can see that Ethereum has been very weak against Bitcoin for the better part of about a year and a bit now, right? So we've had this beautiful downtrending descending wedge pattern. So usually these descending wedges, usually they do break bullish. So that's what we're expecting. They broke the wedge to the downside now, and now potentially reacting back to it. If we can start moving back into it, guys, you will see that Ethereum will start rallying a lot harder than Bitcoin. It doesn't mean that Bitcoin has to go down and Ethereum has to go up. It just means that Ethereum, if we start doing something like this, it just means that Ethereum will go up faster than Bitcoin. Whether Bitcoin's flat, moving up, moving down, doesn't matter. Ethereum will most likely be able to move faster than Bitcoin to the upside. So that is what I'm waiting for here. I'm waiting for Ethereum to start taking over. You can see Ethereum has taken over a lot in the past, setting these nice weekly uptrends on their chart, but now they just not have been able to catch up. So Ethereum still undervalued in relation to the size of the move by Bitcoin, even though Ethereum has come up a lot and the bulls remain in full control of this move. Daily uptrend is set, right? So now any pullback pretty much is just for a higher low. Anything above 2,220 is going to be looking for a higher low for potential price continuation on Ethereum. Bulls in full control of the daily. Bulls in full control of this weekly. Look at this weekly uptrend breakout. It's absolutely beautiful. So a potential move down here into the high or mid to the 2150s is going to be the zone that I'm looking for a pullback. And obviously your monthly breakout pattern is complete. This is a beautiful monthly uptrend, clearly above the monthly moving averages. So I am expecting Ethereum to go on a heck of a tear here. If it does have to consolidate for December and January, like the rest of crypto, maybe we've achieved maximum gains for this current leg right here. If ever we pull back, I will be buying. I am expecting Ethereum to do very nice things over the next 6 to 18 months. So Ethereum, I do think, can provide a bit more juice than Bitcoin at this point, but very tough for me to start averaging into positions now. After such massive gains here, I am expecting a little bit of a pullback, and I will be buying on the pullbacks, just not my trading style to buy the breakouts at the tops. That's pretty much all I had for you for crypto. Now let's move in to big tech, and we'll be covering a lot more crypto, guys, as the month moves on, especially when we get the pullback and it's time to buy. That is when I'll be looking at more and more crypto. Now let's look into Apple. So Apple doing absolutely phenomenally, guys, right? This daily uptrend is clear as day at this point, right? So after some decent sideways consolidation here, bull flag as we were calling for 2 weeks on the channel, Apple with full breakout mode resumed here. We are very, very close to the all-time highs, guys. All-time highs currently standing at 198.48. Wouldn't surprise me if we do break that in the next couple of weeks. So Apple bulls are in full control. Any pullback at this point is for a daily higher low, anything above 187.51, higher low, further price expansion into the rest of December and early January. No red flags on Apple. Apple weekly bulls, full control, now confirming this weekly uptrend breakout. Beautiful, beautiful, beautiful weekly uptrend reversal pattern here, which was confirmed the other day. After extended weekly downtrend, bulls right back into your weekly uptrend. Bulls in absolute full control on Apple. I can't personally buy Apple up here, right? I am looking for a better dip. I would like a dip into the 180s, but I may not get it here. So Apple is kind of overextended for me personally in terms of price action, but also the valuation, guys. The valuation is getting slightly up there for me as well in terms of Apple's historical valuation, of course. Now, let's look at AMD. AMD pulling back ever so slightly after the day yesterday. Well, not really pulling back. Red candle on a green day here. They were high as 131 today, but pulling back into the 128s. So AMD looking exactly like Apple, right? So we had this beautiful daily uptrend confirmation pattern right here. They lost the series of daily higher highs and higher lows. And this is when I said this pullback is for buying. Why? Because your weekly bulls were just waiting for that weekly bull flag to set the weekly higher low and then set the weekly uptrend, right? So now weekly uptrend is more than set. Bulls in absolute full control. Any pullback on the daily, just looking for a higher low. Anything above 116.60-ish is going to be higher low for the run. If we do pull back from here early next week, keep an eye under 125. This is going to be our previous area of resistance here, which is going to be acting as support. So if we do pull back, I want to play AMD. If we do pull back to the 125s, very, very easy. I'll be writing some very aggressive puts, 122s, 121s potentially for the weeklies here. I do want to continuously ride AMD. I do have some long-term shares, but we're going to start getting a bit more aggressive in our options premium because all of the higher time frames are pointing to bullish breakout here for the next quarter pretty much. So I will be trailing the price fairly aggressively with my put options, trying to bank as much premium as possible. And if we get assigned, no problem at all. Everything is bullish. Amazon doing good today. 0.37% to the upside, still challenging our support area, guys. 145 down to 140. You can see the bears don't like that zone, do they? So still protecting this 12 EMA, this yellow line moving average right here, doing a great job of sideways consolidation. I'll remind you, the whole time they consolidate sideways, RSI is coming down, getting ready for the next leg up. Lower time frames, not overbought, and the 1 hour, not overbought either. So Amazon pretty much setting up for the weekly bull flag breakout, just like Apple, just like AMD. Now we are waiting for it for Amazon as well. And I'll remind you, Amazon still with some decent risk reward in terms of your all-time highs, right? And the earnings, those earnings were fantastic. 22% off the all-time highs, still some room to move. So next Monday, I will be looking for puts in this area right here. Going to be a bit more aggressive with my strikes leading into the end of the year. So if we open in the 147, 146 area next week, I may even write the 145s or the 144s, depending where the premium is. So I am going to be looking to ride Amazon into this second weekly leg higher. So going to be looking to get fairly aggressive with my premium here. So great job by Amazon holding up your gains. No red flags whatsoever yet. 142.91 would be pretty much at this point a daily downtrend set. That would just be for furtherance of this weekly bull flag. Bulls looking in huge, huge, huge control, massive resistance, massive support at this point. Don't think the bears are going to get through it. Now let's just see on to the next one here. So next one is Google. Google pulling back ever so slightly today, 1.31% to the downside, but that's okay. They do have a bit of room to move. As I was saying, if we do consolidate at this point, guys, we are just looking for a daily higher low, anything above 129.52, looking to set the daily higher low and confirm the daily uptrend. Google lost the daily uptrend right here when they broke this level right here. They lost the higher low, 135.37, set a lower low. So now the bulls need to reset the daily uptrend in motion. So that's what we're waiting for here on Google. If we do keep trending a bit lower here, guys, I will potentially add to my position, still have those 100 shares in the trading account at 134. So we will see next week if we can just pop this breakout and retest and run. We will see there. But if ever we drop a bit more, I may even get more aggressive and write another batch of 134s, 133s. We will see how it goes. Why? Because Google on the weekly is looking great as well. Just looking for the weekly higher low, anything above 121.57, weekly higher low for the breakout, retest, and then run for the second leg up. Google obviously looking to regain that weekly uptrend after having losing the weekly uptrend here. Bears never set the weekly downtrend, but they did lose the series of higher lows, right? In the process, right? Lower low right here. So now they need to reset it, but bulls looking very, very healthy, guys. Look at this monthly pattern. Monthly breakout is just waiting, itching to happen. And their earnings were absolutely beautiful. Great guidance for 2024 as well. No red flags on Google. Now let's move down to Meta. Meta, another great day of recovery, guys. Oof, I hope some people bought the dip, guys, below the 320 down to 310 was pretty much the area that I was forecasting for Google, or for Meta rather, to bottom out into. You had some very beautiful congestion in this whole area, guys. That's why I chose it. 320 down to pretty much 310 was the area. It looked even better on the weekly. It was even more obvious on the weekly, right? You can pretty much draw your channel right here, right? 310 to roughly about 320-ish. Right, was the area of previous resistance in the past. It was previous resistance in the past here as well. And now bulls are just using that as support. Your moving average was right there as well. The 12 EMA, which the bulls have held pretty much all year on the weekly time frame. So that is why I was expecting a reaction in that zone. And we did get it. Very beautiful reaction. So now Meta looking to regain the daily uptrend here after having lost it right here, having lost the series of higher lows, right? Lost the higher lows, lower lows. Now the bulls need to reset it, right? So if we roll over, would be daily downtrend. That point would just be more weekly consolidation, which is fine. The bulls still have a lot of space to give. Anything above 279, pretty much just a weekly higher low for furtherance of the weekly uptrend. But on the daily, now at this point, the bulls have taken back a lot of this most recent seller's leg down. So it remains to be seen, can they set the new daily uptrend? It's either going to be V-shape or we're going to have to two-step this and set the daily uptrend. But so far, so good. Bulls making great recovery on this slight little dip. That was a great dip buying opportunity, guys. Was roughly an 8.3% dip off the high. So hopefully some people were able to benefit. Now let's move down to Microsoft. Microsoft as well. Microsoft, only a couple days of consolidation, and now we are kind of trending back here to the upside. So Microsoft doing a great job of playing good defense by the bulls. Bulls obviously having lost the series of higher highs and higher lows, right, after having lost this candle. So now once again, they as well will have to reset the daily uptrend to the upside, whether they V-shape this or whether they're able to do this in two steps. We will see, but Microsoft putting in some very, very good work in terms of defense over the last 5 trading days. On the weekly, I will remind you what we're looking for on Microsoft. Just looking for the weekly higher low for further price appreciation. I was targeting personally the 354 down to 340. If ever the selling would have gotten a bit more intense, I would have expected the bulls to pull down in this area before offering a nice dip buying opportunity for further price continuation. Monthly breakout is obviously more than confirmed, so it's a monthly uptrend, clear as day right here. That was your little dip for December. Now, very possible the bulls run with this, especially if we get good data next week. So bulls in full control of this. Bit hard for me to buy Microsoft. I would have averaged into Microsoft a little bit down here, maybe even placed a trade, but we didn't get to my area. So unfortunately, it is just a hold for me currently, but no red flags. Going to be looking for the bulls to recapture this daily uptrend. Now, moving down to NVIDIA. NVIDIA gaining some nice ground here, guys. Not gonna lie, gaining some very nice ground off this most recent dip here. You will see we're almost back to the highs of the dip, right? 486.89 is going to be the area to watch. Either we're going to have to V-shape this, or the bulls are going to have to do it in 2 steps. But now daily downtrend is for the bears. They lost the ability to flush here for a 3rd leg down. So now it's up to the bulls to prove to us that they want to regain the daily uptrend here. Weekly, still looking very good. As I was saying, watch this 12 EMA, watch the 450 area down to 440. That's the area we were targeting. Barely grazed into it here. 449 was your low. So now just looking for the continuation of this weekly uptrend as well. Weekly higher low is more than likely set at this point. We'll just be looking for continuation into the next couple of weeks here. So very, very nice on NVIDIA. And obviously on the monthly, guys, we were expecting the monthly pullback. Now it remains to be seen. Can we crack to new all-time highs and get this monthly uptrend going as well here, guys? So great movement by NVIDIA. Great recovery by semiconductors as a whole. No red flags. Bulls in control of everything. Control the monthly, control the weekly, back in control of this weekly, right? And now the daily starting to recover as well. Just need that daily uptrend to be back to them. Now let's move on to Tesla. Tesla still trapped in our range here, guys. So not much to say on a technical basis in Tesla, guys. It's getting very, very tight. We are holding our 12 EMA, so that's been nice. The whole time we've been in this range, look at these moving averages, right? Whole time we've been in this range, we haven't really lost the 12 too much, or even the 26. When we lose the 12, the 26 acted as defense. So now the range getting a bit tighter towards the upside here. That's kind of what you want to see. Kind of leads me to believe that Tesla has a bullish lean, which we've been talking about, guys, but the rest of the market being up goes to show that Tesla has a bullish lean into this range here. So I'm expecting a potential break to the upside here. Break 247, and you are well on your way to setting a new daily uptrend at that point. And then we will be looking for the weekly highs, guys, right? So this was the previous weekly high right here. You can see right here. So we will be looking for a potential weekly uptrend to be set. Couple weeks of weekly consolidation. If they set the weekly uptrend next week, that will be a beautiful weekly uptrend set. Weekly downtrend was set here back previously in September, right? Now we've been waiting for the reset of the weekly uptrend. You can see weekly bulls gave back not too much. Now consolidating sideways, bull flag for a potential weekly breakout. So we'll see if we can do it. And level to the downside to watch, guys. 231 is the break zone. Break this, guys, and you pretty much lose your technical patterns on the short-term basis. But that would be a very decent buying opportunity for me personally, because we just still be looking for the weekly higher low, right? Weekly bulls are still in a setup very, very beautifully here. Anything above 195, it's pretty much just a weekly higher low for price appreciation. So keep an eye on the break of this range either way for Tesla. And now moving on to Palantir. Palantir with a beautiful day of recovering here today, 3.19% to the upside here. So still looking to put in a bit of work here against the bears. Bears put in a lot of work, guys. But now it might be the bulls' turn to set a bit of reversal here. You saw it here on the hourly. Hourly bulls finally regaining the hourly uptrend today. So we'll see if they can move that into a new 4-hour uptrend into next week, which will mean that your daily move up will be started. So target these moving averages, guys. 1871, need to get above those. They will be acting as short-term resistance. They also have short-term previous support here, which will be previous resistance as well. So confluence zone, we're going to need a very green day to get through that, in my opinion here, guys. But Palantir looking very, very, very good. We need to measure the size of the bounce, how high the bounce. Bounce only like this and start breaking the lows, well, your daily downtrend just continues, but make a very nice move up here, and you may have the chance of resetting the daily uptrend right away, as some other of our names have set. Do have a bullish lean. Why? Because on the weekly, the bulls control the weekly time frame. Anything above 1452, just looking for your weekly higher low for further price expansion into Q1 of next year. Palantir with some very good guidance and potential S&P inclusion here over the next quarter or two. So a lot of positive catalysts, more positive catalysts than negative catalysts for Palantir, that's for sure. So I have been aggressively writing options in the 18 to 17 area, which I will remind you is the area that I was targeting for a potential dip zone because of how often it acted as resistance in the past. So now acting as support. No wonder bulls are reacting a bit from this area. And now lastly, PayPal. PayPal up about 0.79%, kind of looking like Tesla, right? Trapped in this little range right here. I need to see a break of 60.25 to the bulls here, guys. Break that, and your daily uptrend is reconfirmed, and the bulls are doing a great job of playing defense of this 12 EMA. Look at that beautiful defense. After spending so long under it, we're now able to defend it for the bulls here. So great participation. I need to see a nice little kick up by PayPal, potentially a nice 3-4% day into next week, perhaps, if we get some good data. And on the weekly, that would be sufficient pretty much with a weekly engulfment of your previous level here, which is going to be your 63, 64. 64 level. Need to see the bulls get as high as possible to that, really create some space between us and the moving averages down here. Need to see a weekly uptrend pattern shift here, and that would potentially signal your monthly bottom is in, right? So going to be looking very, very closely at PayPal next week as well. If for whatever reason we dip, we'll just keep a close eye, guys, on this line right here. 55.46 is the line in the sand level. Cannot lose this level for the bulls. If ever we do come down here, guys, I will be writing more options for another average into PayPal. And now lastly, let's cover my portfolio. All right, guys, so taking a look at my portfolio, you will see how we ended the week here. Almost 50% year-to-date performance here, guys. 49.79, the S&P 500 all the way down here in the low, or in the almost 20% range here, 19.43. So you can see we're about 2.5x across, above the S&P 500 on the year-to-date performance. On the year-to-date performance, I would really like to get back up into the 60% range. I will just remind you that we have withdrawn about 15% of the portfolio over the course of the year for my spending, of course. And so all that together would be about 65% performance year to date. Very, very good year indeed. Even though the markets haven't really flown to all-time highs, you can see that the markets are pretty much doubling their normal average here. SPY usually 10% a year. We're now at pretty much 20, and we are pretty much 2.5x that. And we are now steadily outpacing the NASDAQ as well, 49.79% for Will, and then the NASDAQ here down at 38.12. So very, very good. In terms of your positions here, let's take a look at the positions that I wrote. So a couple new positions today, but a couple of them were closed as well. So your Palantir 17.5 puts, you guys remember I had those open for the week. They were most recently closed. You could see that we wrote them down here earlier in the week here for about 14 cents a pop here, 6 contracts, and they were closed pretty much automatically this morning here. You can see this, or actually this afternoon, for about a penny. I had a 95% take profit on those. So they took profit and I took advantage of it by getting more aggressive on new Palantir contracts for next week. So I wrote the 17.5s. You can see where Palantir ended here. It's in my support area here, 18 to 17, 17.5, and we wrote them for 33 cents. So getting some very, very juicy premium. I would not mind being assigned. That's why I'm getting so aggressive on Palantir here, guys. I like the weekly pattern formation. I like the monthly breakout pattern formation. And I think this has been a heck of a dip so far on Palantir. We're talking pretty much, 22% to the lows here. So I got a bit more aggressive. 600 shares at Palantir, wouldn't mind taking them at all. That's why I wrote a bit more aggressive here. The Rivian 16.5s, obviously worthless because Rivian is now at about 19. You guys remember this trade from yesterday. Wrote the 19.5 calls on Rivian for next week. I'll remind you, my break even on Rivian is now very, very, very cheap with that call roll as well. And with the 16.5 average expiring as well. So my average now on Rivian is 1686. If we get called away at 1950 for next week, that will be very, very healthy, right? 1950 minus 16.86, right? It's going to be $2.64 times pretty much 200 shares. It's going to be $530 in profit on a very tiny position on Rivian so far. So going to be very happy if we get called away. If not, we will continue to roll calls in profit. BABA 71s, you can see I took this yesterday. BABA 71s pretty much worthless here. Wrote them for 14 cents. Now down to about a penny. So those were worthless. Let those expire worthless. Let's pull up BABA. So BABA, my average cost now on BABA with those two premiums is around $81.51. So not that far really off my $82 assignment price. I wouldn't mind getting more BABA shares down here the whole time because I do think they are fairly undervalued at this level. So not too nervous about that position at all. CELH, you can see we wrote a little position yesterday, 49.5s. 40 cents. They expired worthless. CELH obviously ending above that today. And we did write the 48.33 puts for next week. You can see CLH ending 50.9 today. Right? So CLH, we wrote the 48.33s. I did that video, top 10 stocks, the other day, and CLH was one of them in the $50 to $48 level. So respecting my own analysis here, wrote the 45 puts, one contract in case we dip next week. I will throw another one at this, or maybe even two. So we will see how that does by next Friday. But decent 1% trade, right? 1% for this. And now we also wrote Dollar General, guys. I told you guys I was getting a bit more aggressive on the dollar chains here. And Dollar General, I did appreciate their earnings. It do seems that we're bottoming on EPS. And I said that if we do approach the lower 120 areas, I will be making a slight nibble. So that is my slight nibble. I have a put option open, a contract here to buy shares at 123. 123 would be a very, very good area of support. As you can see, it's been a nice little area of support in the past. Bit higher. This area of support is like 120 down to 116, but I don't mind. I got a bit more aggressive here. Wrote the 123s. Would not mind them down there at all. So we got 75 cents for them. So just over 0.5% for the week. That is well within my averages here. 0.5% to 1% premium of the contract value. That's what we're looking for. Trade Desk 66, they expired worthless here. 31 cents. pocket them. Trade desk ended over 70. I will still be looking for them next week. If ever we dip back into the 60s, I will be looking for another contract here. So a lot of premium pocketed here as well. And obviously the UPS, I closed the 157.5 calls that we had open. You guys remember, if you do remember, I wrote them earlier on in the week here for 87 cents a piece. UPS did not finish above 157.5. So they finished 156.30. So we pocketed the covered call premium. You can see that right here. We closed them this afternoon for 2 cents. And then we wrote the 157.5s for next Friday for $1.62. So 162 minus 2 cents, that's a net credit of $1.60. So I added that to my tally right here. You can see that as well. Now my break even on UPS is 143.48, guys. So if we get called away next week, if we end above 157.5, I will be called away here at 157.5, and we will pocket this entire amount that we've generated, roughly $1,400. If we don't, or if we're slightly above it, I may be even able to roll the calls for even more profit. Very happy with this. This is a over 1%, right? $1.60 versus 15,750, right? So that's roughly a 1% trade for next week. So nothing wrong with that. And everything else is still in the portfolio here, guys. Nothing too high, right? TMF trade still here, still profitable. Here's the BABA shares. The CP shares, still holding them. Google shares, still holding my 100. Not going to write covered calls just yet. I want to get more money on the shares before writing covered calls. UPS still here. PayPal still here, 200 shares, right? Rivian to write down here. CSIQ, not high enough for covered calls. My Canadian banking ETF, now very close to break even. So very, very happy about that, guys. So hope you guys enjoyed today's video. That's all I had for you guys today. Have a beautiful weekend. I will try to upload a few videos on the weekend here. I have a couple subjects that I do want to cover and potentially bring you guys a few value plays, a few of your remaining stocks that are undervalued that I would like to nibble onto. So hope you guys are doing well. Have a great weekend. See you over the weekend. Take care and peace.